Warren Buffett, the king of investing, the legendary investor, is no longer investing in the stock market. I'm going to explain to you exactly why he's no longer investing in the stock market and what this means to everyday, ordinary investors. That's what we're going to be talking about today. What's going on, subscribers? Welcome to the Underdog Investing YouTube channel, also known as Flaming Profits, where we teach you how to become a more profitable investor in the stock market. We're a giant community of like-minded individuals who invest to make money in the stock market. So if you want to be a part of the community and learn what exactly it means to invest and make your money work for you, then make sure you subscribe so that you do not miss out on any brand new videos. I do want to share some amazing links where you get free money, free stocks, absolutely free money, free stocks. With M1 Finance, you get free $20 as soon as you sign up, and you can choose where you want to invest into whatever stocks that you prefer with those $20 that they're giving to you away for free. All you have to do is deposit $100, and you can choose to sell after that if you like. And then we have Robinhood, my favorite brokerage that I use every single day. You get a free stock as soon as you sign up, so no reason why you should not do it. You can sell the stock if you want to and just keep the money. So I'm basically just giving you free money if you use that link. And then we have Webull. You get 2 free stocks, so instead of just 1 stock, you get 2. I did this and I got about $15 of free money because I decided to sell the 2 stocks. And then we have the Discover Secured Credit Card, where you get 1 to 2% cash back on every single purchase. I use this card every single day, and you get a $50 sign up bonus if you do decide to sign up. Plus, you'll get the 1 to 2% cash back. Some people are using their regular debit cards or paying in cash, and that is a giant mistake because you're missing out on a lot of extra money that can be given to you for free on purchases that you will make every single day. Alright, so let's get to the video.
I mean, he said before when he went to 100 billion, it was too much. He wanted to deploy it. Now he's 122.
Right. Warren Buffett could buy 3 Occidentals with that money. Yeah. Well, you know. The funny thing, Catherine Chiglinski, who wrote the story over the weekend, the thing about it that she drew light on that I thought was clever was him complaining about his cash hoard in 1998 and then again in 2004. Because even though he was complaining about holding so much money at those times, just after that, he made some of his greatest bets. Mid-American, which really was one of the cornerstones of his energy empire. And then after 2004, we had 2008, when he lent to Goldman Sachs and General Electric.
But Rick, Warren doesn't like to overpay. Does this say anything to us about valuation in the equity markets right now? That maybe things are too expensive?
So I think to some extent it says something about the dichotomy in the equity market. You've got 5 to 10 companies that have a huge percentage of the global stock market, and they're driving the equity markets. And then you have a lot of businesses that are some good businesses, but a lot that are more difficult today, and certainly in the manufacturing sector, industrials are having a hard time. I think in what is a more traditional business, it's hard to find a lot of companies with significant top-line revenue growth. And then, you know, I don't know how he's thinking about where you are in technology, but that's driving a lot of what is the upside in the equity market today. It's a more skewed equity market than I've ever seen before, anybody's ever seen before.
Well, and then to that point, I mean, the bets that Berkshire made, say, in Apple or Amazon, like, he didn't make them. Like, that was his team. Like, he still likes things like Coke and candy bars. But yet they're all, so I thought that was interesting too.
It's definitely interesting. It's his team that's making the bets. But remember also, it's something I think is interesting, speaking of debt and equity, some of his greatest bets right now, and something he hinted at earlier this year that he would do more of, is a lot of more preferred lending in times of stress for deals perhaps, like he's doing with Occidental and Anadarko right now.
But those are great deals because the preferred lending, because they also, he takes warrants, he can convert it to equity if he wants to, and he uses his huge capital that he can deploy and make some money off it.
Yeah, I mean, having him in whenever you're doing a financing, a capitalization, having him involved has a series of benefits well beyond the capital he puts in. But you know, what also is endemic of the fact that today, capturing income in a world that doesn't have a lot of income, we're watching it play out today. If you can own preferreds or if you can own income-producing assets, in a world that's, particularly if you're an insurance company or the nature of your balance sheet, it's a big winner. And searching out those yielding opportunities is big for particularly a place like that.
So Warren Buffett, the owner of Berkshire Hathaway, one of the largest holding company in the stock market that you can actually invest in, has a big problem right now that I don't know if you've heard of this before, but basically the issue is that we have been on a bull run for so many years, and Warren Buffett just doesn't feel comfortable investing anymore. So basically what he's been up to is just hoarding a bunch of cash. Right now he's sitting at $112 billion in cash. You might be wondering, why is this a problem? Isn't it good to have a lot of cash? Well, the problem is that if you're holding on to cash, you're basically losing money. Just like if you have money in a bank account, you're losing money through inflation. So everything, all sorts of costs go up over time. So this is called inflation. That means that the money you have now is worth less in the future. And every year we lose about 3.15% to inflation. So if you have $100, now it's just like you have $97 instead. And when you have so much money like he does, 112 billion, this means that in a year they're losing that 3.15%, which is equivalent to $3 billion. So every single year that he holds on to that cash amount, he's losing $3 billion. Every month he's losing 294 million. And basically every day he's losing $9,800,000. So this is a big problem because he would prefer to invest that money, but he's just seeing overpriced stocks and he doesn't feel comfortable buying into them yet. Warren Buffett recently released his annual letter to Berkshire Hathaway shareholders. One thing investors weren't too surprised to learn is that Berkshire has cash, a lot of it. After a few quarters of successfully reducing its cash by stock investments, Berkshire finished 2018 with roughly $112 billion in cash and equivalents, an increase of more than $8 billion from the third quarter. In Buffett's letter, investors also learned how Buffett plans to use the company's cash hoard going forward. And so yeah, he has a lot of cash right now, and he just kind of doesn't know where to spend it yet because he doesn't find any value in the stock market. And Buffett has always loved having a lot of cash on the side. However, he has never had this much on the sidelines. Being a cash-rich company has allowed Berkshire to make some particularly savvy investments when times get rough, such as buying Goldman Sachs during a financial crisis era and Bank of America. However, even Buffett doesn't want too much cash. It's bad for profitability to keep an unnecessarily large amount of cash on the sidelines instead of it being invested and generating returns. Buffett's magic number is 20 billion. He likes to hold at least this much in cash equivalents in order to guard against external calamities. He wants Berkshire to always be extremely financially solid and to never need to raise cash in a pinch, no matter what. So doing the math, this means that Berkshire's current investment budget is roughly 92 billion when it comes to making an acquisition or otherwise putting money to work. To put this number in perspective, this is greater than the market caps of companies such as Starbucks and Lowe's. In short, that's a lot of money to spend. So he could actually buy the entire Starbucks company and the entire Lowe's company as separately. So this is kind of like crazy that he has this much money saved up and stored. Here's what Buffett would love to do. Longtime followers of the Oracle of Omaha are probably not surprised to learn that Buffett wants to acquire an entire business, and the bigger the better. As Buffett puts it, we continue, nevertheless, to hope for an elephant-sized acquisition. However, just like Buffett said at the end of 2017, businesses want ridiculously high valuations as takeover targets. He reiterated at this point at his latest letter, the immediate prospects for that buying an entire business, however, are not good. Prices are sky high for business possessing decent long-term prospects. In 2019, Berkshire was a net buyer of stocks to the tune of $24 billion. Buffett says that the stock market was by far the most attractive place to put capital to work in 2018, as opposed to trying to buy an entire company. Buffett sees the same for 2019. The disappointing reality means that 2019 will likely see us again expanding our holdings of marketable equities. It's also worth mentioning that Berkshire's buyback plan was amended in mid-2018 in order to make it easier for the company to repurchase Berkshire stock. Berkshire repurchased nearly $1.5 billion of its own stock, and it's fair to assume that as long as Buffett continues to believe it's priced attractively, more buybacks are probably in store. So yeah, that's what's going on with Berkshire Hathaway, Warren Buffett. He has so much cash, and this is actually a bad thing because he's going to lose money through inflation. So he desperately wants to invest that money, but he just doesn't see any good values in the market right now because we're very overpriced, and this is the longest bull run we've had in history. So basically, prices of stocks are ridiculously high. Every single stock is pretty much at an all-time high, with an exception of some. But so yeah, what do you think about Berkshire Hathaway? What do you think about Warren Buffett? Do you think they're gonna be able to make good purchases if they wait to a recession? Do you think it's good to wait for a recession? What are you personally doing? Are you still investing in stocks even though they're more expensive than normal? What do you think is gonna happen? Let me know in the comment section down below. I'm very interested in what your opinion is on this subject. And yeah, just let me know what you think of this overall situation going on. Alright? Thanks for joining the Underdog Investing YouTube channel, Flaming Profits YouTube channel, where we teach you how to become a more profitable investor. Make sure you give the video a like if you enjoyed it. It really helps me out, and it helps the video get to more people. That way they can enjoy this type of content. Also, make sure you leave me a comment up below, and make sure you subscribe. That way you do not miss out on any brand new content. I'll see you in the next video. Peace.